into the business and leaving your business. Okay, so Mayowa said investment. Yes, there's investment. Operating cost, yes, in terms of, that's the operating cash flow. There's one more, okay. All right, so let's move on. So let's look at this case study, and I want you to just follow along with me. So assume, I'm using very simple examples so that you can understand and be able to apply it to your business as well. So assume you sell Ankara fabrics and you have 200,000. Let's assume that you have saved up this 200,000, right? Or maybe you borrowed it from your friend or from a family member and you bought 4 pieces of fabrics. Let's assume that each of the fabric costs 40,000 naira. So the total cost of the fabric is 160,000 naira. So let's assume that you sold it to BJ at 50,000 naira each, but you sold it on credit. You didn't collect the cash immediately. Remember, your cost is 160. Your sales or revenue is 200,000. So how much is your profit? I know it's there, but I just want you to please calculate it yourself and just type it in the comment section. How much is the profit? How much is the profit? We need to move very fast so that we can cover a lot this night. 40, okay, 40K. Please, you need to work it out yourself. I want to be sure that you are following. Okay, 40K, great. So remember that BJ has not made any payment. The following day, or 2 days after that, JP came and requested for 5 pieces. So how much cash is left with you out of your 200,000? Out of your 200,000. Remember, you sold 4. You sold 4 at 50,000 each for 200,000, but BJ has not paid you, right? Now somebody has come to request for 5 pieces. How much do you have left? Okay, Charles, great. You have 40,000 left. So what is going to happen? Remember, we spoke about profit and cash. And I'm going to differentiate between profit and cash right now. BJ has made a profit of 40,000, 200,000 less 160 cost of the fabrics. There's profit already, but can he fulfill the next order from JP? Can he fulfill the next order? No, no. Why? Why can't he fulfill it? No cash, no fund, no, okay, there's not enough cash. Exactly. So that's the difference between cash and profit. The business is making profit, but he has not collected the cash. So there's an opportunity cost now. He can't increase the sales again. Just imagine a situation if he had collected the 200K and someone has requested for 5 pieces, he will be able to buy the 5 pieces and his profit will continue to increase. And the profit will continue to increase. Now there's a flip side, there's a flip side to that. He either goes to the bank to borrow cash to be able, to fulfill that order, or he can go to the vendor to ask for credit. But he may not get the credit if he has not built the relationship with the vendor that will enable the vendor to trust him to return the funds. So he is denying himself of future sales, he's denying himself of future profits, and therefore he's depleting his cash. And remember also that if he's able to get the loan from the bank, he's going to pay interest because cash is not free. You need to note that down. Cash is not free. He's going to pay interest. And let's even assume that he got the loan from the bank. Remember that his initial 40,000 naira profit is going to reduce by the amount of interest. Is going to reduce by the amount of the interest he needs to pay. So customer management, cash management determines the success of your business. So you can't even joke with it. So, I mean, am I making sense? Are we getting the drift? Are we getting it? Absolutely, yes. Yes, great. Exactly. So what are the key points? Now, your credit policy is extremely important, right? Your credit policy is extremely important. So you need to make sure that your credit policy aligns with the nature of your business. Otherwise, you'll be incurring additional costs and you'll be denying yourself of additional sales. And your vendor management, remember that if he had good relationship with the vendor as well, if he has built trust, then they can give him some of the fabrics and ask him to pay later, right? So effective cash forecasting, we enable proper liquidity management. So what I'm trying to say is that you need to plan your cash, you need to manage your cash, and everything starts with the planning, and we will get into that. So you need to forecast how much cash is required at any point in time. And one more point I want to highlight is that if you're not tracking your records, there's no way you'll be able to plan your cash flow. There's no way you'll be able to manage your cash properly. So one thing you also need to look out for is how quickly are you getting paid by your customers? Because it's extremely important. And I want you to pay attention to this. Profit determines whether what you are doing is worth your while, but it is cash that will make it possible. Like the example that we saw. Yes, you sold it at a profit, but without cash, right, it won't be possible to fulfill additional orders. Okay, so let's move on. So one thing I also want you to remember is that, your cash flow is like your financial crystal ball, right? And that is the reason why you need to plan ahead. You need to forecast your cash flow. And we're going to go through the steps that you need to take in estimating how much cash is required. It is extremely important because if you don't track it, you will not be able to ascertain when cash is going to come into the business, how much is coming into the business, and where you need to make your own payments as well. Especially when you have facilities, maybe you've taken additional loans from the bank. You need to prepare your cash flow statements. You need to forecast your cash so that you'll be able to know exactly when cash is required. And one other point I want to make here is that your bank statement, I always advise business owners that make sure that your transactions are passing through the bank. It will help you to manage your cash flow, one. And secondly, you are building trust with the bank. Because at some point in time, you need to expand your business. You need to get additional loans from the bank. So, but if they can't see the level of transactions that is going through your account, right, they won't be able to ascertain the volume, right, that they can give to you. So the quickest thing that a banker will use to assess the size of your business is your bank statement. And that's the reason why, as a business owner, you need to separate your operations from your personal finances. You need to have a separate account for your business so that all your business transactions can be going into your account. You know, you're achieving two things. You are managing your cash and you're also building trust with the banks, so that when it is time for you to get additional funding, it is easier for you. They can trust you. So what are the advantages of projecting your cash flow? You can predict when you are going to have shortages and surpluses. You know, it will give you a warning sign, right? Then you'll be able to compare how much you are expecting to make and how much you are going to spend, so that you can start, you know, proactively engage. Maybe you engage your vendors to give you additional credit days, you know, to give you more time. And it will also help you to follow up with your customers so that you can get your payment faster, right? And, you know, it will also help you to understand if you need to cut down some of the expenses. You can see the things that are generating more revenue for you, or just other expenses that are just frivolous. It will give you an understanding of how cash is coming into your business and what you need to do. So let's just move, we're going to move faster now. I've laid the foundation. So how do you prepare your cash flow forecast? You need to identify what is the cash you have at a particular time. And that's the reason why your bank statement is extremely important, so that you have a single source of reference. You can have several sub-accounts, but you know, you're in such a comfortable position that at any point in time, you can ascertain how much cash you have. And you know, with the level of the digitalization we have now, you can call up your account, you can check your balance, you can download your statement as well. So I encourage you this night, you know, to ensure that you separate your personal transactions, your personal financial transactions from the business. Have a separate account for your business, right? So that you'll be able to monitor. So you need to identify how much cash you have at the beginning, then how much is coming in the next, maybe on a daily basis, weekly basis, monthly basis. You can do it as, you can take it as granular as you desire, right? Then you need to estimate expenses for the next period. So by the time you subtract the expenses, then you know how much is left at the end of the month, and you will be able to plan. Because sometimes, you know, when you do this in advance, you'll be able to know whether there's going to be a shortage, and you can plan ahead. You know, instead of running helter-skelter, instead of looking for, you know, some loans that are so expensive, because you, let me call it, maybe you need bailout at that point in time. And like I said, cash is not free. So when you plan it ahead of time, you can also determine if you are going to have excess cash, so that you can invest the excess cash in the business and generate additional interest and generate additional income. So that's the reason why, you know, you need to ensure you plan your cash properly. So like I said, how much sales are you going to make? Now, you can look at your past transactions, depending on the number of years you've been in business. This is just indicative. If you're just starting your business, maybe you've done only 6 months, at least you have an idea of the pattern, right? How customers are buying. And sometimes you need to factor in seasonality. For instance, during rainy season, let me just use a very simple example. If you're selling cold drinks, for instance, during rainy season, there's going to be a reduction, right, in the volume of sales. So if you know that ahead of time, then you'll be able to manage your expenses for that period. It is not the time that you are going to plan to buy equipment, because you know that during those periods, you know, the level of sales will drop, right? Then you can estimate how much you are going to get from your customers. You start checking the buying pattern of your customers. You know, how long does it take for them to pay you back, right? Then looking at your credit policy as well. And you know, at the end of the day, you'll be able to match the timing of your collection with the timing that you have to pay your customers. And I will get into that in a bit, right? Then you can also, so the next thing you need to look at is know when you will get paid. I think I explained this a bit. You need to project your collections. You know, when you sell, like the example we saw, BJ sold, let's assume he sold in the month of March. Remember, he didn't collect his salary. I mean, he didn't collect the payment from the customer. He would have recorded sale. But for the purpose of cash, it's going to be zero, right? And this is where the planning comes into place, right? You can tell your customer that, okay, I'm giving you 15 days. While you are planning that, you also need to now plan with your suppliers that if you know it will take you 15 days to collect from your customers, you now need to agree with your vendors that, okay, please give me 30 days. So that at any point in time, you're collecting faster than the commitments you are making. Please just note that down. Your credit policy must be in such a way that you are collecting faster from your own customers than when you are promising to pay your vendors. Extremely important. And remember that when we're talking about cash flow, we're looking at the actual cash movement, not the sale, because you can make a sale without collecting the cash. And that's the mistake most people make. They are selling, but they are not collecting. So it becomes difficult, right, to project when payments will be made. I've spoken about the seasonality. I've spoken about the credit policy. Now, the next thing you need to do is you need to estimate how much you will spend. You know, after looking at how much you're expecting from your customers, when you're expecting them from the customer, you now need to look at how much are you going to spend and when, the timing as well, right? You have to plan for your the payroll, the salaries, your day-to-day running expenses, your diesel, PHTM bill. And you know, these days is now prepaid, so you have to pay in advance. Remember that you are paying in advance, right, for power. And if you are not collecting in advance from your customers as well, it becomes a problem. So by the time you estimate how much you are going to spend, right, and you would have factored in the seasonality, then what are if you have a loan, for instance, you also factor that into the cash flow planning. When do I need to pay? Because this is one of the challenges that banks are having with business owners. They can't ascertain that you'll be able to pay. And if you are not able to pay, you know, you lose credibility, you lose the opportunity of expanding your business as well. So you need to take this into cognizance. Then the other thing okay, I've spoken about how much you need to spend. Then you need to look at, is it something that you spend every month? Is it fixed, right? Because if it is fixed, then you know how much you are going to spend, let's say for the whole year, right? And if it is variable, for instance, if it increases based on the volume you are selling, for instance, if you're selling, let's say 100 pieces or 100 loaves of bread, right? The amounts you need to buy the ingredients, right, will be different from if you're producing like 500 loaves of bread. So it is extremely important, right, that you look at all these things side by side so that you'll be able to ascertain when you need all this fund. And at the end of the day, you need to put everything together. Your inflow, your outflow, and what is the balance. So in a situation where your outflow is more than your inflow, then you need to, you know, look at it. Do you need to postpone some items that you want to buy? Or if they are critical to generating revenue, you can start planning, or you can start talking to your bank, your account officer. You can start checking to tell them that, oh, by next month or in 2 months' time, I'm going to need so much amount, so that you can start putting in your application for the loan or an overdraft, whatever it is you are asking for. Then, let's look at some of the cash flow problems and the causes. Sometimes you don't have, from a strategic point of view now, you don't have enough customers, or maybe you are underpricing. This is one area that business owners are really struggling. If you underprice your products, there's no way you can generate enough cash, right, to take care of all your expenses. Or maybe you have too many expenses. You are just starting your business. You rented a shop or an office in a high-brow area, and you are not generating enough cash to cover the cost. So you need to evaluate your expenses again, right? Or maybe you are actually selling, but you are not collecting from your customers. Or maybe there are tax exposures. You are not paying your tax on time. So everything has piled up. So these are some of the things that you really need to watch out for, so that you don't fall into that trap. Or maybe your products are seasonal, like I mentioned earlier. So, and you have not planned for those seasonal periods, like this rainy season. Those that are involved, maybe selling cold beverages and things like that, their businesses will be affected, right? Or maybe you have too much inventory. You are not planning your sales properly, and you just buy so much inventory, you tie down your cash. That is another problem. Or maybe you have bought some slow-moving items, so they are not moving very fast. And this is why some businesses, they get into doing sales almost all the time, because they didn't plan their cash, and they didn't plan the level of inventory that will be required. And sometimes you are not even managing your cash flow properly. You're not sending out your invoices on time. You are not following up with your customers. You are not making it easy for your customers, to assess, to make payments. And I will mention some of the things that you can do. So what are the steps that you can apply to address cash shortages or the gaps? Sometimes you may have to reduce your outflow, but you can't do this if you have not planned. If you've not done a forecast of how cash is going to come in, you won't be able to identify areas where you need to cut down, right? Then you need to make maybe improvements in your business. Have you checked your pricing? You need to look at the pricing, very important, because that's like the starting point of where the cash will come in. Your sales is dependent on the price and the customers. So you need to look at your pricing properly. Have you covered all the costs in the prices you are charging your customers? Then you also need to look at what are the things that the productivity of your staff. Look at that as well. Then do you need to do some promos or some marketing, to ensure that the items move very fast? Then are you chasing your late payers, your customers? Are you following up? Have you made it easy for them to pay you? Do you have maybe POS? Do you have, can they pay through your account number? Through the make direct transfer? So have you made it easy for your customers to be able to make payments, right? So some of the things that you can do, you need to track your cash daily, encourage your customers to pay directly into your bank, right? So that you can track and know how much is coming in. Then make sure you invoice promptly, right? Expand the number of points through which customers can pay you. Flutterwave is there, Paystack is there, POS is there. Make sure that you take excuses from your customers. Otherwise, it is easy not to pay. So make it convenient for your customers to make payments. Then if there are issues with the customers, resolve them on time. And when it as much as practicable, you can ask for advance payment, especially when you are dealing with high-risk customers that don't pay on time, right? Then develop relationship with your vendors as well, so that they can trust you and they can give you some leverage, right? Because that will also help you to improve your cash flow. And ultimately, you also need to increase your revenue, because the more your revenue, the higher the collection and the higher the cash that will be available in your business. So let me just, I'm running out of time. So just understand your cash flow cycle. When you order, because it starts with you ordering your goods, you receive, you pay, then you sell, you deliver, you send invoice to your customers, and your customers pay. I just want to make a point here. If you delay sending your invoice, you are delaying your payment, because especially if you're dealing with corporate organizations, if you don't send your invoice, you won't get paid. So if you wait until maybe after 2 or 3 months before sending your invoice, that is when they are going to start processing your payment, right? So understand how long does it take for each of the value chain, right, to convert into cash. How you can even study that to see how you can improve that. It will give you some sense. Then I just want to quickly explain this concept. It is very, very important, right? Especially if you are looking to bring in investors into your business, or maybe you need to get funds from the banks as well. Sometimes they can just ask you cash burn rate and your runway. How many of us are familiar with this concept? I just want, let's move fast now. I need your quick response. Are you familiar with the concept of burn rate and runway? Are you familiar? Okay, Maya, are you familiar with this? Okay, no. Okay, most people are not familiar with it. Okay, so let me explain. So when we talk about, when maybe you go to the bank or you are discussing with an investor and they're asking you, what is your cash burn rate? Or what is your runway, right? All they are asking you is, if they give you, let's say they give you funds now to run your business, they want to know how much you are spending every month. How fast are you going to burn their cash? Is an investor term, right? They want to see how fast, right, you are going to burn their cash. And they want to evaluate how prudent you are with your cash. So all he's just talking about is how much money are you spending compared to what you are generating in the business. If what you are generating in the business is not high, right, then you will burn your cash faster. So let's use an example. And the runway is how long is the cash going to last? Whatever amount you have. So let's just use an example. Let's assume that you have 15 million in the bank, and every month you pay 2 million of salaries, 3 million distribution and other marketing, then 1 million other admin expenses. So every month, your gross burn rate is 6 million. That's 2 plus 3 plus 1. That's 6, right? So every month you are burning 6 million gross. Now, let's assume that your revenue is 2 million on a monthly basis, and 1 million is the cost of goods sold, right? So what is your net burn rate? What you just need to do is take out your cost of sale from your revenue. So you have 1 million left. So your net burn rate is 5 million. That's 6 million less the 1 million that is remaining after taking out your cost of sales from your revenue. So every month you are burning 5 million away because you are not even generating enough cash. So when you go to the bank and they ask you, what's your burn rate? Then they ask you, what is the runway? So the runway is just telling us how long is this money going to finish. Investors are really very concerned about this. And I want this to be like the icing on the cake this evening, right? So for this, I mean, in this particular example, the net bond rate is 5 million. The business owner has 15 million. So if you divide 15 million by 3, the runway is 3 months. So it means that in 3 months, the cash will be finished. So investors usually use this to gauge how long the money they are giving to the business will last until they start planning. And also for the business owner, it will give you an idea of how long your cash is going to last so that you can also plan appropriately, right? So, I mean, this is just a sample of a cash flow template. You have the cash that is coming into the business. What are the payments, right, that you are going to make? Then if you have any capital payments, you have to pay, maybe you are paying loans or you are buying assets. So how much is going to be left, right, at the end of the day? And this is just a sample for you to see the structure of a cash flow, right? Then I have another example here. This one is showing that there's a problem. But the good thing about this is that by the time you prepare this, right, it will show you that there is a problem and you can plan ahead of it. And look at the problem here. This person is giving 60 days credit policy is a problem. You won't collect cash until the end of the second month is a problem. And meanwhile, most of your expenses, you are paying for them almost immediately because you can't owe salaries. You have to pay salaries every month, right? The materials and accessories you are using, you've agreed to pay your vendors in 1 month. Meanwhile, you are allowing your customers to pay you back in 60 days is a big problem. It's no, right? So you need to ensure that you are really working on your cash flow. It is extremely, extremely important. So I'm just going to close it here. This is an opportunity that MSME has given to you. And like this saying, opportunity dances with those already on the dance floor. So are you on the dance floor of your cash flow? Are you going to manage your cash flow in the right way from today? And nothing is more expensive than a missed opportunity. Don't miss this opportunity. You need to work on your cash flow. Extremely important. So thank you very much. I've put my contact details right here so that you can get in touch. And I will also put my contact details. You can follow me on Instagram, and I have a course on cash flow forecasting. So the template I showed you, you can get it if you subscribe to get the cash flow template. So thank you so much. And I want to especially thank Sheye for this wonderful opportunity. So thank you, everyone. Thank you so much. So Sheye, over to you.
All right, thank you so much, Ma.
Yes.
We've had quite an insightful evening with you, and it's really been great this evening. Thank you for obliging to come to the training this evening. I would do really appreciate. So before we close, I don't know if there are questions. Would you like to take questions, please?
Yes.
Okay, so please, if you are in the house and you would like to ask any question quickly before it is 8:35, let's have your questions so that Mrs. Aralepo can attend to it. Thank you. So you can just drop it in the chat box. I'll read them out, please. Okay, so should we take that there's no question? Should we take that you really understood everything? Of course you will, because the slides are, self-explanatory, and she really took her time to explain as well. So if you don't have any questions, we do understand that you have understood into details everything. Oh, so from Mr. Ibrahim, he said he has questions. So Mr. Ibrahim, please type in your questions. Let's attend to it before we close. Okay. The first question here is from, okay, let me open. Okay. The first question says, when do I know as a business I'm going to have a problem with my cash flow? That is from Afolabi Adekunle.
Okay. Okay, so you need to understand what is the stage, what level are you in your business? Are you just starting, or you've started for some time? And what are the requirements? Like I mentioned earlier, there are 3 areas where you need to look at your operations, because you need cash to run your business on a daily basis. Then, are you seeking funding? So when you run your business on a daily basis and you are planning your cash ahead, you already know when cash will be required, right? So that you can start taking proactive measures. Do you need to talk to a bank? Do you want to expand your business? So let me give a very practical example. If you are just starting out your business, most of the time you start with your own personal savings. It also depends on the type of business you're starting out, right? If you're starting out like a fintech business, for instance, there are so many opportunities now, these accelerator programs, that you can get some seed capital to try out your business ideas, right? Because it won't really, you won't be able to optimize your business if you've not done your homework, done your research about the business you're doing, what you require the cash for. Is it to run operations like your working capital, or do you want to buy equipment to expand? Remember, I mentioned earlier that you need to be able to match the source of funding to what you require the fund for. At the initial stage, you start with your savings, then maybe you bring in or you get grants, or you participate in accelerator programs so that you can get some seed capital. Then as your business is growing, you've tested your ideas, you have started generating revenue, your cash flow is consistent, you can start talking to the bank, right, to support you. And at some point, as you are doing that, you're also building credibility with the vendors as well, to support your cash flow, because that's also another source of funding. Then as time goes on, you can now start talking to investors, right, to bring in cash into your business. So these are some of the things that you need to consider, because it's not a one size fits all. You need to look at your peculiar situation and what you require cash for at that point in time. Then do your planning, do your cash flow forecast. Then you will see where there's going to be a problem.
All right, thank you, Ma. So I hope it is clear now, Mr. Folabi Adekunle. Then the other question says, how do you know as a business that you are making profit? That is from Olajumoke Labinjo.
Okay, simply put, is your profit is your revenue less less your cost of sales. When you take out your cost of sales, you arrive at your gross profit. Then from the gross profit, you now take out all your operating expenses. So whatever is left is your profit. In fact, that is another class. We can spend another 2 hours on understanding that. And there's a webinar coming up that I'm organizing on KPIs, and I will touch on some of those things there. Okay. There's a question here. What is the cost-effective account software? The one that has inventory sales. Sage is I think is cloud-based. You can access the account from anywhere, and the amount, I think it ranges between 200 and something, right? Then there are some. Wave used to be free, but it's no longer free. It's been restricted to US and Canada. But I think there is Zoho that you can check out. I think that one is free for 1 year, but you can just check that out, right? So is there any other? Okay, suppose I intend adding the lease to own. No, I need to understand. Charles, your question is not very clear. So, okay, now, well, if I understand what you're trying to say, your cash flow has to do with cash. Now, if you're paying your rent in advance in the month of, let's say, you have to pay it in July, you have to pay, let's say, 1 million as rent. When you are doing your cash flow forecast, you need to include the 1 million in July as cash outflow. In your profit and loss statement, you amortize it for the length of the contract you are signing, because you have to pay in advance. So cash is going out. That's the reason why I said when you are doing your cash flow planning, is the actual cash that is going out of your business. Because most of the time, the cash will move faster, right, than the expenses. When you are preparing your profit and or loss statement, right, you allocate the rent because you are paying it in advance for, let's say, 1 year. So you divide it by 12, and every month for that month, that is the amount of rent that you have utilized. So that's the difference between your profit and loss. The profit and loss statement is based on accrual method, right? But the cash flow is pure cash, when that cash is going to leave, right? So when the cash leaves, it will be in your balance sheet as a prepayment. You have paid it in advance. You will use it over time in the business. So I hope that clarifies.
Okay, yeah, I think I need to step in now. We have questions coming in, but
the time.
Yeah, the attendance is actually massive and quite impressive. At a point, we had close to 95. We had like 95 people, and it's been an awesome class. Thank you so much, Mrs. Aralepo. Thank you everyone who has joined today. So if you want to, I know there are still many questions. So what we can do is this: we would actually plead with Ms. Aralepo. She will attend to those questions in our community. She's a member of the MSM Africa community. So if you want to know, if you want to have answer to some of the questions we are not able to answer now, you can join our community. The link is in the chat box. Just click join the community. It's free. Yeah. So you will she will probably dedicate some hours to us in the course of next week or whenever, so that she can attend to those questions. And she also mentioned that she has 1 or 2 courses that are paid. I would implore us to take part in those courses so that I can have better depth about the things she has discussed with us today. But I'm sure we'll agree we had a good session. So we just say thank you. Type thank you in the chat box. Let's just say thank you for a wonderful session. And before I go, yeah, all of us here are very important, but I need to recognize 1 or 2 people. So I noticed Mrs. Fire Williams is here. She's also a member of our community. She took the session for last month, where she talked about writing a compelling business plan. That was also another seriously massive session. Everybody is still talking about it. Before then, we had another session that was facilitated by Dapo Modular. Is also in the room on business structure. Wonderful, wonderful session. So this is what we do every month, our business growth series, where we bring in experts to talk to us about things that would help us to manage our businesses well. Also, Mrs. Ayodeji Mogbope, yes, I could recognize you. I saw your comments on Instagram. You said you're going to be part of this session and you are here. If you don't mind, Ma, could you just speak to us for like 1 minute? Just say something. We consider it a privilege to have you.
Yes, it's a privilege. Thank you so much, Ma. Thank you so much, Ma. She's my mama.
Thank you, Miss. Thank you, Mrs. Megbokwe. And I'm already developing an idea right now. We would love to have in the next 1 or 2 months. Do we have a yes, Ma?
Oh, wow.
We'd like to glean from your knowledge about how you've been running No Leftovers.
Thank you so much for recognizing my presence. And Mrs. Aralepo, oh, thank you so much. That was so full of depth. And thank you, MSC Africa. Well done, well done. Hearing you mention the Mrs. Fire and the other speaker that you had the other time, I was like, oh my goodness, I wish I could have been a part of that. Well done, great job. And it's a yes, 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 it's a yes.
Thank you very much. Yeah, it's good to ask. It's always good to ask. So I'll come to you. I'll contact you. Thank you very much, Ma. So I think it's a good time to call it a day so that you can have enough time to rest. Thank you everyone for being a part of the session. Join the community if you are not yet in our community. Everything we do is free. So apart from the monthly session, we have weekly sessions too in the every day about everything happening within the MSME ecosystem. We have a news website, msmeafricaonline.com, where you get to see opportunities about funding, accelerators, incubator, and everything you can think about within the MSME ecosystem. Thank you so much, everyone, once again. Until we meet here next month, have a good.
Thank you, everyone.
Thanks and God bless you.
Amen.
Thank you very much.
Thank you.
Well done, Toyin. Bye, everybody. Bye.
Bye.